How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel solely dedicated to investing as well as my personal journey to amassing $100,000 in my Vanguard brokerage account. Now, as of today, that account is sitting at $74,523.84. It is up by $119.88 since my last video, which I believe a lot of this market momentum is stemming from the bipartisan infrastructure bill that just passed the Senate. However, I certainly foresee more market volatility coming our way, especially after taking a look at the COVID numbers going back up. These case counts are not good for the state of the market. Once we see more mask mandates and other restrictions put into place, we should certainly see a market that is full of fear, creating a nice opportunity for investors like you and I to go ahead and jump in, doubling down on our positions, which is exactly what today's video is all about. Because if you are a long-term investor buying quality companies, you have absolutely nothing to worry about. So today's video is all about the 3 stocks that I just doubled down on, increasing my position with each of them. Now, all of these stocks are paying out dividends, but most importantly, each are undervalued. So a video you will not want to miss out on. Now, with that said, YouTube, go ahead, tap on that thumbs up button as it helps me out in growing the Blue Lion Finance channel. But most importantly, if you personally have not already subscribed, go ahead, tap on that subscribe button for me. And not only want all of you along for the journey with me, but want each and every one of you taking advantage of the One Hope Wines $50 gift card giveaway that I have underway right now, in which one lucky winner, the moment this channel crosses the 1,000 subscriber mark, is going to be receiving the wine of their choice from One Hope Wines. So YouTube, with all of that out of the way, let's go ahead and jump right to it. So in diving right in, the very first stock I want to talk about is Apple. That's ticker symbol AAPL. Now, Apple is certainly a company that does not need any sort of big introduction. You're probably all very familiar with Apple, or at least Apple products. But I will share with you, for the investor out there who's watching this video looking for a more in-depth video on Apple stock, more of an Apple analysis, go ahead, follow through on the card that will appear above. It will take you to a video I recently published just on Apple stock alone. But a brief synopsis of that video, I am essentially just making the case that Apple is the ultimate investment for any and all investors because of the room that it has left to grow. Now, Apple, if you're an investor, you can invest in it for the next decade and fare very well, or you can invest in it for the next year to 5 years and still take advantage of Apple's growth. Diving right into their earnings report, they recently reported they brought in $81.4 billion worth of revenue in the last quarter alone, which is just insane considering the fact that that is reminiscent of their days back in the early 2000s when they were a much younger tech company trying to assert their dominance in the industry. But certainly what continues to build my confidence in investing with Apple is the fact that I do not see their growth slowing down anytime soon. Now, they have a brand new iPhone lineup coming out in the fall. So even though their stock pulled back this week after their earnings report, as it typically does, I only foresee it skyrocketing once again once those brand new iPhones are coming out. I mean, they have incredible brand loyalty. Regardless of the modifications that are coming out on these iPhones, it could be the slightest modifications, iPhone holders are always ready to buy in, which is of course good news for me as an Apple investor. Regardless, taking a look at what analysts are saying, that Apple stock is currently undervalued. It's sitting at $145 a share right now, but expectations are that a median share price will rise to $165 and it will launch to a high of $190 per share when it comes to Apple stock. So I went ahead this week as it pulled back to buy 1 share of Apple, bringing my total share count of Apple to 68 shares. Now, coming up on the second stock I bought this week, that being Medtronic, ticker symbol MDT. Medtronic was founded back in 1949, so certainly has a beautiful, rich history behind it. But it is a medical technology company that engages in the development, manufacturing, and distribution of medical devices, surgical equipment, and the latest technology when it comes to prosthetics. Now, a company like Medtronic is going to be around for the long run simply because it falls within the healthcare industry. It is a leader within the industry itself, but most importantly is taking a look at their dividend history, because in taking a look at that dividend history, we can see they've been paying out dividends for 43 consecutive years, and each year increasing that dividend, meaning they are a dividend aristocrat. As of right now, their dividend yield is currently sitting at 1.96%, and as a dividend investor, it is certainly a safe bet because they fall within the healthcare industry, an industry that is only ever continuing to grow because, well, we're all looking to live longer, healthier lives. Now, here's the sweet deal when it comes to investing in Medtronic. We can see here that they had a pullback in their stock share price. It hit a high this year of $130, but dropped to a low this week of $125. Now, I believe that is because of the Delta variant, with more elective surgeries being put back onto the back burner. And those elective surgeries, with Medtronic being a surgical device company, they are certainly taking a hit. But we will see a rebound, and analysts are expecting that same rebound, with a median share price launching up to $140 per share and a high of $155 per share. So after picking up one share of Medtronic this week, it brought my total share count to 11 total shares of Medtronic. And last but certainly not least, we have Realty Income, that's ticker symbol O. Now, Realty Income is a REIT, so a real estate investment trust. It is certainly an outstanding company to invest in. It says it right in their name that they are a monthly paying dividend company. They were founded back in 1969, and since their founding, they have been doing an outstanding job growing a beautifully diversified portfolio with over 6,700 different properties across all 50 states, and they're expanding well into the United Kingdom and Puerto Rico. So definitely diversification I would like to see, at least on a real estate front. Now, their clients also make me very confident in investing with Realty Income, as those clients range from 7-Eleven, Walgreens, CVS, Home Depot, Kroger, Walmart, you name it, you've probably set foot on Realty Income properties and you didn't even know it. Now, their stock didn't necessarily pull back this week, but they're certainly a company that I'm only ever dollar cost averaging my way into. Now, when it comes to their actual stock this week, I bought in at $70 per share. I bought 2 shares, bringing my total count to 52 total shares of Realty Income. But that dividend yield is sitting at a nice 4%. So regardless of that share price, I'm constantly buying into Realty Income, especially when analysts are saying that this stock is undervalued. If we're taking a look at what those analysts are saying, we can see that the median share price should be around $77 per share with a high of $86 per share. So again, just a company that I'm only ever going to continue to dollar cost average my way into. And that's it. So between Apple, Medtronic, and Realty Income, those are the 3 stocks that I've doubled down on this week, as I find them to be undervalued stock opportunities to hold on to for the long haul, each paying out dividends, which excites me the most as a dividend investor. Now, if you yourself are interested in investing in any of these stock opportunities, make sure you do your own due diligence prior to investing anything at all. I am by no means a financial advisor, just a YouTuber here. So with that being said, make sure you leave comments below. I'd love to reply to them with my own personal opinion. And of course, go ahead, tap on that thumbs up button to help me grow this Blue Lion Finance channel. Moreover, if you have not already subscribed, go ahead, tap on that subscribe button for me while you're at it. Now, YouTube, with all of that being said, I look forward to seeing you in the next video.